Okay, MMTs, here we are, 600 a.m. Markets are going to open in 30 minutes. Not only that, the date, 11/9/2011. And what's important about today is that the bond yields have finally gotten out of control. And because of it, you have markets gapping down. Dow Jones right now gapping down 202. NASDAQ is down 41 handles. S&P gapping down 26. It is another mark down based on another crisis outside of the USA. So you have a your minus 1.65% ratio on that Dow, and your minus 1.67 ratio in the NASDAQ futures, minus 40 handles. Gold, on the other hand, is minus 0.4 or minus 0.02%. CAC is down 40, 2.8%. The DAC is down. It's minus 125.30, rather more like minus 2.10 ratio percent. Minus 104.31, minus 1.87% on the FTSE, and the S&P futures naturally minus 2690. That's a minus 2.11%. Dow futures right now negative ratio, gap down 1.67 ratio. And so you have all of these negative ratio gap downs today and prices that are being marked down like they were last week. And one thing about us, MMTs, is we know how to take advantage of those markdowns because there are some good buys that are out here. Okay? And when we look at the quality, such as Google, okay, Google's gapping down 6.65 ratio. And when you have a strong stock that we have been featuring Google now for the last whole quarter, before when we were long Google before the earnings again, and you had a pop. And when they mark it down, that the Google trend that we talked about, it was up at 616.50 last night in pre-market or after hours. This is pre-market gap down 612.34 to that. So we're going to mark the option down. And what are we going to do? We're going to go right over here to the 605 call, and we're going to put a limit order out at 3.70 right now. We're going to try to steal that bid on the opening bell. So on the 605, they marked it up to 1150. And one thing about Google, that the price will be very strong at that price action support level, and it will be verified in the SMF market maker trading platform. It will verify there. And once you're verified, then that strength and that price action will be moving in your direction, and you'll be making your entry transaction. So I got limit orders here. This is the gap down. You got Amazon with the 3.3. Look at that bull. Minus 4 ratio right here. Okay, look at price line. They really walked that long tape. Even Bill had updated me on how they walked that tape all day. Now we're going to see how they mark it down. And Adobe had some good news in their investors. So they're marking equities based on the Italian bonds. The Spain index is down 239 handles. Italy, well, they're down 520 handles, 534 now. And the DAX, well, it's down 125 handles, minus 2.13%. That's your morning pre-market gap. Your Italian banks, well, hey, Unicredit's down. All of them are down. The French banks, take a look at them. They're all negative right now, today. The Spanish banks, hey, they're all down right now, every one of them. So we know where the German banks are too. Deutsche Bank and that other Commerce Bank over there, AG, look at them. They're all down. So the financials, look at the UK banks. Right now, they're all down. 1.33. Lloyd's Banking's down 1.28. Barclays is minus 8.95, minus 4.97% on that one. So we're going to really be watching how the people like us will understand to mark the price down. And we have a limit order out here live right now here in pre-market at 6:05 a.m. Pacific Standard Time, buying the quality that we've been representing for a long time. And we always said that the higher up in the delta that we get, like at 612, that when you drop down the bid, you're dropping down in the 600s to work your way up to that 625 handle. And when you get markdowns, you look to see where the seller is cleared out. They'll mark this call down, and in the short short time, they're going to mark up the put side over here, the 605s. These puts were marked down big yesterday in Google. Even the 610 put, look, it was marked down, and so was the 620 put. All of these were marked down. They're going to mark these up to the high, and then watch the $600 call that expires Friday. I'm going to give a bid on this one right here, and it's going to be 6.70 for right now on the markdown bid. Here, on the $600 call, here, live in pre-market at 6:06 a.m. Pacific Standard Time. Yesterday's high was 15.70. I've given a bid at 6.70 right here on 11/11, $600 call. Yes, I have, in pre-market. And we're going to see how they mark the call side down to that wholesale price level where the MMT is buying wholesale. And that's what we're going to do here. That's the bid on the 600. Set alarms on the opening. Set alarms down there at 10:50, and then set another alarm at 9:70, and set another alarm falls to 8.5 before you get down to that 670. I got it here and live right now. $600 call right before you. Pre-market. Let's not be confused. 11/11, 2011. How do you like that? Now, based on the close here, the equity, and the current bid of 604.50, that is going to be your key mark, because you have to go get into your application, MMT, and get that lower delta. So you got to go from that close, and then you got to go into your MMT application and go down into the negative ratio ranges and find out where that ratio is going to be. And once it stops and turns and goes up in price action, you're going to want to be net long in these wholesale calls. That's once again, I'm going to conclude the Italy has a problem. This is pre-market. It's a benchmark. It's a major event. It's a major moment. It is 6:08 a.m. Pacific Standard Time. The date is, once again, 11/9/2011, and it's all about, if you've never seen a video like this is where people make markets in financial markets and bid and ask and mark down quality of companies. There's lots of things that go into it outside of the media and what's going on worldwide financially. Remember, stockmarketfunding.com already said a couple of years ago that this was going to happen. It's not like we didn't, but if you have the good quality equity, once again, with everything that's in your trading document plan, you will know that as you learn through the processes of markdowns related to worldwide event is the topic and the subject. And what it is we have moved away from Greece to Italy. But we knew that Italy, you don't get to this capitulation markdown unless you hit a certain point on the yield spread. Once again, it's a monumental. We're going to mark our entries down, and we're going to get down below the market. And we're going to be watching this $1,200 put that was at $31 when we went up to the 50-week moving average on the S&P 500. You can go look. You can go look, everybody, on where we slightly got above that 50-week yesterday. But the thing it didn't have the qualifier was not met. What was the qualifier on that one? We all know what it was. You would have had to have really strong buy side right through that 50-week moving average by at least a delta and a half. Now, Google, on the other hand, has been marked down. And once again, that is your markdown list, and it is huge. Here and now. It is 1.00 as a qualifying ratio. You can take a look right here, right now, on the gap open down list with the Italy being involved and contributing to this. And worldwide banks, once again, have to recapitalize themselves, and you have to go through another markdown process. Remember, the topic is the worldwide event. That's the topic of today. And the futures is the mechanical side of when futures are down, well, they drop and they mark down the prices. And you have to have the quality. Look for that price line to bounce off of that bottom. Look for them to mark down the prices here. That bull. Look at that bull. That TQQQ bull. Minus 4.35. We're going to get ready to rock and roll. We got 18 minutes to the opening bell. MMTs. And we're going to fire our wholesale bids. As a market maker, we are. That's the wonderful thing about being here, is understanding the mechanical processes at wholesale pricing levels on how to get in. And we got a bid on a 605 call, I believe. Hey, put these limit orders out here